All right, good morning. Are we streaming? Yeah, I guess so. Is that right, JP? Hang on, let me check the quant box. I'm there anyways. Yeah. Hang on. I did it. I see it over there. Hang on. Probably just forgot to click one little tiny button. Wednesday should be in that tab, and I hit save. It's there now. Yeah, sorry about that. Oh, you can't even see. There it is now. All right, good morning, everybody. It is 6:31 a.m. on Wall Street, about 3 hours before the open of trading. Welcome to Quant-in-a-Box and Quant-in-a-Box Live, where we get our global macro on, where we uncover the best fundamental investment. All right, cool. Now, did I probably didn't upload it to YouTube. Boy, I've been all over the place today. All right, well, let me do that. I have to download it as well. Interesting, Quant-in-a-Box. Boy, how did I not do that today? So many responsibilities. It's such a burden. The reason is I've been doing tradeplans.ai. I guess I should get that out for you. I can't see, my camera's in the way. We'll get going. youtube.com/@tradeplans.ai. Here we go. Hey, welcome to tradeplans.ai, where you can get feedback on your... Anyways, cool. So here's today's video. I already have some technical analysis here, and they have a downward sloping trend. So I've already done today's video. Will you feel free? When you post to tradeplans.ai, not only will you get instant feedback from our artificial intelligence named Aiden, but you can also get anonymous social feedback, and you can get feedback from me. So anyways, yeah, awesome. Awesome blossom. Awesome blossom. Cool, yeah, so much going on. Nothing's right, I'm torn. So I gotta do the, I've forgotten I need to switch over to Quant-in-a-Box and upload the Quant-in-a-Box video. Maybe I can just do that now. Hey, welcome to Trade Plans. And I go upload video. Oh, wait, it did the wrong one. I'm going to have to delete that. It's done this error twice now. Almost done. Sorry, I don't multitask very well, so I just have to do it. Upload video. And then I go over here, which is the download 2 minutes ago. And I drag it here. Cool. Now hopefully that gets done. All right, on with our show. All right, so I've done Quant-in-a-Box, then I've done trade plans, and now I'm doing Forex.Today. Okay, very cool, right? What a busy life. What a world, what a life, I'm in love. So, very cool. Let's start with a risk warning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, It's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Okay, let's move over here. I'd like to point you towards Trader's Way. Please check them out. Open up a demo account, see if they can earn your loyalty and respect. They would love the opportunity to do so. They earned my loyalty and respect about 8 years ago. The website's clean and easy, MT4, MT5, all that kind of stuff. But ultimately, they're an ECN and they execute your trades. Okay? That's what you want. Okay? That's what you want. They actually execute your trades. Other brokers B-book you, put you in a bucket, trade against you, and laugh all day long. Trader's Way respects you and does not do that, and they simply enter your trades into the interbanking system as promised. You should check them out. I also would like to point you towards, here we are. Wait, no, that's actually where the event is going to take place. See? And then you can go into this live stream like that. I got to get you the sign-up page. So 1 week from now, I am doing the fourth quarter outlook. Where's that page? No, I don't. Oh, here it is. Let me get rid of that. So 1 week from now, we are going to meet as a group and go over all the global indicators and discern whether the end of the year is going to be good for us or bad for us. Well, it'll always be good for us. How about this? Risk on or risk off? We have to make intelligent decisions. So I'll go through dozens of economic indicators. We'll go over the summary of economic projections, and we will get our heads screwed on straight for October, November, December. Okay, we did Q1, we did Q2, we did Q3. I thought they were all good. I had a good time. I really enjoyed doing them. So anyways, please sign up. I will pop the link right here. Interesting. Anywho, yeah, whopping $10. Whopping $10. Very important though. And which actually then reminds me, now I got to take you somewhere else. Sorry about that. Investor Boot Camp. investorbootcamp.com/CIA. Is that the URL? Yeah, so if you're a member or even want to be a member, many of you emailed me and you're preparing to become a member of the CIA. I want us all to meet today. So I'm going to have to send you an email for those that have already expressed you want to be part of the CIA. And again, this is an elite group of investor boot campers and others that want to learn portfolio construction and management strategies and techniques and actually manage money, my money. We're going to turn 50 grand into $1 million US dollars in my real account. Yeah. And we're not Forex trading. This is investing. This is long-term investing. And so anyways, the idea is we meet 4 times a year when the summary of economic projections are released. Well, that is today. So this would be an unofficial CIA meeting because I haven't taught you investment strategies. So I have to teach you that first. So we will gather today and go over the summary of economic projections, but then we'll talk about what I'm doing to set everything up for our first meeting, which is, I think it's December 12th. I don't think this thing at the bottom is working. I don't know why. But we're meeting December 13th in Nashville, Tennessee. So between now and then, I'll discuss my strategies to prepare you for that meeting. I think I put 50 grand in the account, and I think it's up to 55 grand right now. So by the time we meet, it's probably going to be closer to 60 grand. But I have some cash now. I'll have some more cash then. And we need to make some investment decisions. But I have to teach you all about the hedge fund strategies and all that kind of stuff. Anyways, I want you to join the CIA. We're going to meet in person and online. So if you're like, Wayne, I'm in Eastern Europe, and okay, well, we will do it online as well. But the real intent is for us to really meet as a council, because I want to hand out things like various prospectus details about various hedge fund strategies that I would consider investing in. I have to show you what I'm already in, and that kind of stuff. I want to have open discussions and stuff. And of course, I want to have, a steak dinner and some wine and some cigars with you as well. So that's why I want to meet in person 4 times a year. I'll be there every meeting, but I'd like it if you can at least make 1 meeting a year. I'd appreciate meeting you in person. So Sky Killer says, so today's Fed meeting will probably only be for the CIA. Yeah, I can't do both at the same time. Okay. Now, you can add your membership to Investor Bootcamp. Let's say that's the only thing you do. You can do that. You can add it to your swing trading, right? So let's say you're a swing trader. You can add it to your swing trader situation. So, right? And the cool thing is you end up saving a couple $100. Or you can go to the mastermind, get everything, including Quant-in-a-Box Pro for a year. Annual membership to Investor Bootcamp. Annual membership to day trading. Annual membership to swing trading. Annual membership to Quant-in-a-Box Pro, annual membership to the Council of Economic Advisors. You save almost $700. Eat boo-boo. So anyways, yeah, I'll send you some emails. We'll get together today. Sorry, I have a lot going on, but there are many ways for us to work together. I hope you see it that way. All right. So here we go. I guess we have to start with this. This is the one that we're looking at. I'm long Kiwi yen. This was a trade I did Sunday, I guess. It's probably after our day trading meeting, because day traders meet on Sundays. And you can see the little dipsy-do. And now we're here. So if it was a weekly swing trade, I could take profit right now and be happy with it. Okay, because that's a central pivot, and we're basically at R2. There's a cluster here between daily R2 and weekly R2. At some point, it doesn't matter if, right? I have 100 pips on this. I could walk away and say that was a good 3 days. Okay, so that's what's going on there. Another one that's been set up, and we've done this multiple times. So the only thing I can say is it's continuing as planned. Okay, so this setup worked. Then we did a higher low last week and set that up, and that has worked. And now we have yet the third one now, which is up, down, gone. Okay, good. It's working. Beautiful. Okay. Original setup was like around 94, and now we're on our way to 96. So we're up 200 pips since we start setting this up. So it took 2 weeks. So it's not like it was fast, easy money, but this 618 is now at the 1382. You have to understand, like, that's the target. Look, I mean, look, it's drawn out. It's been drawn this way for weeks. Up. Let me do it in a different color. Up, down. Look, 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 look. Here is the target. And this is where we are now. A 382. Sorry, wrong. A 618 predicts a 1382. Okay? That's in my book. That's in the training course. That's in this trade plan. And it is now complete. Everything beyond this is unexpected. You could argue the actual target is 96.67 or something, 96.5. All right, yeah, okay. Okay, well, okay. Kitty Cad, this is that dangerous one. Amazing pop on it, huh? Just amazing pop. Okay, danger zone, big pop, drop. Okay, and you can be going for R3. And we're not there yet. R3 is there, 111. Look at this idiot spamming us. Look, everybody. Look how stupid they think we are. Oh. All right. Pound getting crushed. Japanese stock market. This is one that we have to go up. Ugh. That one's ugly, though. Ugh. I think I have it set up somewhere else, like on the stock indices. Was it here? Yeah. Anyways, waiting for this to go up, trying to get above and ride the predictive moving average. Not quite there. We have hit a cluster of monthly and weekly pivot points, and it looks like the monthly is being used by investors. Okay, look, monthly, monthly, monthly. It seems like the time frame is monthly. Okay. So right now, still below the predictive moving average. And so you probably want to remain a bear. But the weekly trade plan is up to 34. And that would bring yen weakness. FTSE is doing really well today. Okay, inflation is dropping. Governor Bailey probably does not need to raise interest rates further. That weakens the pound and pushes up the FTSE. So we've breached this area here. Okay, this might come into play. This is where we are now. There's another one up here. But nonetheless, this is an important distinction of change of trend. Okay. So if we can breach this, ooh la la. Let me adjust this since it's here. Let me adjust it. And so we're at the mean price, but with expectation of higher. That would be risk on. That would be pound weakness. That would be yen weakness. That would be dollar weakness. Now, Richard shorted pound yen. Now, why would you short pound yen? So you're trading something that is bearish, but both of these assets are weak. You know, I mean, I don't. So I don't like it. Yeah, it's messy, bro. Yeah, that's messy. Yeah. Okay, so like this is one that I set up last week. I did a video on it, posted it to YouTube and everything. For Euro Aussie and Euro CAD to fall. You know, like it's a cleaner trade. Right? So yeah. Hang on, let me get some tea. Let me get some tea. Hang on, I'll leave you here. Let me get some tea. All right, I'm back. I'm back and I got a bigger get. Oh, wrong one. Wrong one. Hang on. What camera? There we go. That camera. Do I trade stocks? Uh-huh. You should watch, that was the swing. I discussed it in great detail, Boris, in the swing trading group last night. I talked about it for like 2 hours. So I'll tell you everything, Boris, if you pay me money. All right. All right. EuroCAD was another one, but look at like we've hit target, right? Yeah, and look, we hit S2. Like technically we should be done. Okay. Because of September, we expect that maybe our S3 comes into play. So you got some dangerous decisions to be making right now, but I would still argue that EuroCAD is a cleaner trade than pound yen. Oh, thank you. Appreciate that. I love wearing suits. I always have. I just don't get many opportunities anymore. So I'm just going to change everything. Richard, you saw that one too? Yeah. Cleaner though, right? That's all I'm trying to get to. To me, cleaner means less risk. Okay. For example, Richard, Canada just found out that their core inflation jumped from 3% to 4%. Holy crap. Well, I guess Bank of Canada is going to have to raise interest rates again. Boom, dollar strong. Kitty Cad Ripper. Ripper Kitty Cad. You know what I'm talking about? Yeah, and pound. Yeah, I'd get that. So we can take a look at some of those. I mean, right? Like, right? Double top and drop, baby. Double top and drop. Top, stop, and roll. All right. Like, so that's all I'm trying to say, Richard. Is like, what? Okay. M3, this is MM3, predicts MM1. So let's go look at that. MM1 is 88.50. So technical analysis would tell us there to there. Minimum. Okay? If you're a little more aggressive, then you're going for that number, which is 86. And if you're ripper enthusiastic, you're taking it from, let me get the drawing tool. Delete. You're taking it from here to here, but only in the month of September. But, I hope it works out, Richard. But I'm a bear on both of those. So that's where I'm like, what? It's funny. Maybe that's how the market works, but I wouldn't have even considered it. That's why I was a little surprised. I'm like, what? What do you mean pound yen? Okay. We missed my target by 50 cents. Actually, technically less than that. Less than 50 cents. So the big question is, do you buy this dip or not? If you think we're going to $100, maybe $120 a barrel, then maybe $90 is great. So again, if you think we're going to 100 and beyond, 90's cheap. If you believe R3 or the monthly central, it was the same thing, or annual central. This is the annual central pivot. Monthly R3. So you can say, well, yeah, I think we're going to go 100, but we need to visit 85 or 80 first and then resume. All right, but I need you to plan this in advance. Okay, I'll get rid of that. Okay. So notice that these annual pivots, okay, let me highlight them. Do you think they're being used? Okay. Okay, they're not perfect, but you see like the bottom's not perfect, but there's a lot going on in this price zone, huh? And remember, this was established last year. Okay? And now we're wimping out here. Yeah, it's interesting, isn't it? Okay. Is it plausible we go test 116 to 125? Yeah. And therefore 90 is not terribly expensive. I mean, look, if we're going to go to 90 to 125, that's another 30% increase. 30%. Okay, it'd be interesting if we could pick it up at 85, which is this number here, and go for, what, 135. Whoa, dude, 135. Okay, look how high we made it. Just shy, like 2 shakes of a lamb's ass away from the R3. Well, what's this year's R3? I don't know if I could even fit that onto a chart. No. I can't even fit it on the chart. It won't let me squeeze it, right? Yeah, it's just too much. It's too high. There we go. No, I still can't. It's way above that. It's above $1.50, 150. Now, I'm really zoomed out. I have to get rid of price. The all-time high. Oh, what's it doing? Delete. The all-time high. I did it again. Weird. Whoa. It won't let me go that far back. All right, well, we'll go here. There's the all-time high. Let me drop it into weekly. Now, and of course, I can't even fit that. So it's $1.40 or something, huh? What if I do it this way? $1.47. Okay. Notice when it got that expensive, the entire economy collapsed. Okay. The entire economy collapsed. Well, sweet. Oh, good. Now, look, now I can fit that in there. Interesting. All right. So if we are going there, that might be the solution to our inflation problem. You might lose your job. You might lose your house. You might lose your retirement account. But remember, the government did this to you because they thought it was in your best interest. It's really hard to believe that the central bank and the central government didn't even talk to each other about their $5 trillion stimulus packages. Like the central bank never thought to check in with the White House or vice versa. Like, oh, you're doing $5 trillion? I was going to do $5 trillion. I don't think you need to do $10 trillion. I mean, it's so extraordinarily negligent. But I guess the argument in the time is that it's a zombie apocalypse anyways. We might all be dead of COVID-19. Well, if you think that way, then you're going to generate that kind of fear. And you're like, well, anything is better than dead. That's hysteria, though, isn't it? So anyways, the central bank did $5 trillion, the central government did $5 trillion. And now moving into the future, and by the way, I'll show you this. In next week, and do you have the link? So 1 week from now, I'm going to show you the debt on the Fed's books. And I'll show you the progress they're making in fixing the problems created by COVID. The sad thing is the central government's done nothing to fix the problems they created during COVID. Now, if you believe in Keynesian economics, right? Maynard Keynes, John Maynard Keynes, He said the government's supposed to step in time of need like that, okay, and create demand. So the government's okay, they did that. The only thing is they did that when the factories were closed. Keynes wasn't thinking about the Spanish flu epidemic and global trade because they didn't really have that kind of trade at that level. But they had the Spanish flu, which, by the way, we still have the Spanish flu. We just call it the flu. So we'll probably have COVID forever, right? So anyway, so COVID comes along and shuts down the economy. So the government does what John Maynard Keynes would suggest, and that is step in and create the demand that was destroyed. Okay, great, cool. And that's usually where politicians stop. John Maynard Keynes said, run deficits during times of need. Okay, great. Then what did he say? Then when times are good, raise taxes and pay down the debt that you borrowed during the bad times. And of course, politicians never do that. They spend when times are good, but when times are bad, they spend even more. And so at some point, I think there will be a time of reckoning where the United States will have to pay a pretty big penalty for not taking the medicine. Okay? The cancer doesn't cure itself. So we'll have to take a look at that number and see. I can show you what the Fed's doing. I don't know what the central bank or what the central government is doing. I don't believe there is a plan. The Fed has a 10-year plan. I'll show you the progress they've made. Cool. But what if it's an exogenous shock, something to do with, let's say, Saudi Arabia, aka oil, and at the same time, not coordinated per se, but two fronts. Okay? There's an issue with China, whatever the issue is. And that's where $5 trillion is destroyed in the United States economy. Now, the U.S. economy is a big economy, but 5% of it was 5% of the current economy now has to do with. Hang on, what is it? Anyway, so $5 trillion of the U.S. economy currently is nonsense money. It's not real. Remember, real is productive. Real is digging a hole, and now you have a hole. What did you produce? A hole. What did it take? What did it cost? Blood, sweat, tears, time. You also needed a shovel. If you didn't have a shovel, a stick. And if you didn't have a stick, your bare hands. So or you used a tractor. One is capital intensive, but incredibly productive. And the other is not capital intensive, but very unproductive. But you still produce something. Whether it cost you a lot, it cost you nothing. At least you have a hole in the ground. What can you do with the hole in the ground? Well, you can put plant to plant, and maybe this plant will produce fruit, and you can eat the fruit. Sweet. But what if you did nothing? Well, if you did nothing, you'd get nothing. So then what? Well, if it was a lot of people not doing anything, then prices would fall because there's not a lot of demand and there'd be too much inventory from the people that were productive. And so they'd have to lower prices because there's not a lot of money. Well, what if a lot of people were unproductive but got free money? They didn't do anything, but then they got money. Well, then they go out and they buy stuff. And that drives prices up. Normally, you wouldn't buy stuff if you were unproductive because you wouldn't have any money. You didn't produce anything, so you don't receive anything. So you don't go out and buy stuff because you don't have anything you can afford to buy. So in economics, inflation is actually impossible. Right? Inflation comes from politics. So if you have inflation in your country, it's your government's fault. They created it. Think of capitalism. Capitalism lowers prices. Yeah. You're like, wait, no, it raises price. No, it lowers. The richest people own companies that provide products or services that are either cheaper than everybody else, or they're all their competitors, or they're significantly better than all of their competitors. Okay? There's no strategic advantage of being the second or third cheapest. Capitalism forces efficiency, cutthroat, ruthless efficiency to lower prices so that they can sell the product for as cheap as possible, aka Walmart. Now, you might not like Walmart, but Walmart's cheap. They don't have Walmart in Cuba. Things are not cheap in Cuba. Things are expensive. So, if the government doesn't do a controlled burn to ensure the forest is healthy, then we're going to have an out-of-control fire, and it's going to burn hot until every tree is gone. There's 5 trillion trees that will burn. The problem is, will it stop at 5 trillion or 8 trillion? Because nobody's in control of the capital burn. They're not trees, they're capital. So, if the Fed wants to destroy $5 trillion of debt on its balance sheet, it could let those bonds mature, or they can sell those bonds, and they can do it in a controlled fashion and end on a very specific date. 10 years from now, reduce the Fed balance sheet by $5 trillion. They can do it very slowly over 10 years and it will not hurt. That's the idea. It's controlled. So is the government going to raise taxes for 10 years and slowly pay down COVID debt and call it the COVID tax? They're like, hey, it's the better than being dead tax. Well, that would be the mature thing to do. What would you do if you were saving for retirement and you also have put together a rainy day fund? Because everybody should have a rainy day fund. Shit happens, right? And so you're ruthlessly saving money, being very prudent, and the car breaks down. You need $5,000 for a new transmission. Okay. You take it out of your rainy day fund. Sucks. You don't like it. But then you're like, well, I'll put in $100 a month or $200 or $500, let's say $500 a month. And by the end of the year, my rainy day fund will be topped off again. Okay? And that's how the government should be working too, don't you think? Now, what the government did is instead, because the government was broke, then what they did was put it on their credit card. There was no rainy day fund. So they borrowed money on a credit card. So that was 2 years ago, and interest rates have gone up. And they still haven't paid it back. They haven't even started to pay back their credit card bill. That's a problem, isn't it? So anyways, maybe if oil is going to go up to here, and there are many reasons why I think we can hit an all-time high. First of all, 90 might be cheap now. But second of all, that could be the thing that takes down the house of cards next year. And that's what would make the Fed slash interest rates. So until then, I sell the dollar every day. About a year and a half ago, I was at dinner with a hedge fund manager at the Harvard Club. I treated. Aha, ha, ha. And he said, "You're a perma bull. No, bear. You're a perma bear." I'm like, "Yeah." No, actually, I said, "Really? You think I am?" And he's like, "Oh, that's you. You're a perma bear." I think he even pointed his finger at me. "You're a perma bear." I am? Maybe so. It's because I'm an optimist. I buy the dollar when things are bad. So I am a perma bear. Things are going to be great. Why? We're not at $150 a barrel yet. Okay? So I'm going to sell the dollar. And then if the stuff does hit the fan, it's okay, bro. I'm a currency trader. Doesn't bother me. I'll just buy the dollar. It's okay. I'll buy the reserve currency. It'll be fine. Okay. Is it the end of hegemony, the United States dominance? Probably. That, right? Probably. We're getting there where they're not going to be the only superpower in the world. They'll probably have to share, which means it's a shame that my children learned Spanish in high school. I got very upset. Like, Spanish? I have nothing against Spanish. I'm just like, why aren't the kids learning Chinese? I said, 30 years, what's the chance that my kids are working for someone that doesn't speak English, only speaks Spanish, versus working for someone that doesn't speak English, only speaks Chinese? Right? I'm like, oh my goodness. So anyways, it could happen where things will change and your high school will be teaching Chinese as fast as possible. Highlander says, watching a series called Suits, and they had a scene from the Harvard Club. Harvard Club, New York? Yeah. See, there's one in Boston, and there's one in New York, and they hate each other. So, but I imagine you're talking New York. Yeah. So I'm a member of the club in New York, but not in Boston. But a buddy of mine, a fellow Canadian, he's a member of the Harvard Club of Boston. Yeah, so we can double dip. What do you think is the next reserve currency? Not there. There isn't one coming, not anytime soon. Definitely not the yuan. And most likely, it's going to be some other digital currency or something. Ripple. Peter, I love your thinking, man. I love it. If you're gonna go big, go all in big. Yeah. You want to do euro dollar? All right. Okay. Ba, 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 ba. So it's hitting target. So look, there's really like, you're like, Wayne, that's wrong. No, it's not wrong. This is right. It's a trade plan. If price holds on M2, then buy the rollover. Okay. And it didn't do that. Now the equal and opposite is this one. Okay. Now here's the thing. I'm set up for dollar to weaken in the next, let's say, 10 days. And I'm already a bear on euro, so, okay. Now typically euro goes up because the US dollar goes down. So that might occur, but I think I'd be better off, selling USD CAD. I'm probably better off buying Aussie dollar. Okay. So, so this doesn't excite me. Look at S2 to S2. Yeah. Now, we might get a big surprise today, probably in the SEP, and we drop all the way down to 104. Okay. How can I predict that? Oh, I can't. So I was thinking about today's event. So I think, just thinking out loud, okay, what happens to gold if euro dollar drops? Well, if euro dollar drops, dollar strong, risk off, gold down. But it's complicated because nobody cares about the interest rate. Okay, but nonetheless, how does this sound like a plan? Do you want to attend the interest rate decision? So, should I do a live stream somewhere? A live stream? Yeah. trying to plan my day here. Trying to plan my day. All right, I think what I'll do is I'll do it at Investor Bootcamp for every member of Investor Bootcamp. We can do a pre-meeting, and we can get the announcement, and we can do a quick look at the charts. Then I'm going to roll over, and right as the press conference starts, I will do a private session for the CIA in the CIA room, and we'll watch the press conference together and go through the summary of economic projections. That should be a pretty busy afternoon. What do you think of that? Is that fair? Yep. I mean, it takes time. I'm going to have to set up a room and get it all programmed, then get all your memberships attached to it, and then send out an email. And, you know, do you care that much? Should I spend an hour of my time setting this up? What about YouTube? Right? No, Richard, the first part would be for everybody. Oh, right on. Thank you, Cherokee. Well, time to start. So what is it, 2? So why don't I do 1:30? We can get together in the main room at 1:30. And I will do an overview of the FOMC. Okay. And then around, right, so that'll last from 1:30 to 2:30. Then at 2:30, I'll switch over and meet with the Council of Investment Advisors. And I will have to figure out how to do this, but I'll invite the people that have emailed me with the intent that they want to join the CIA, and I'll let you in so we can talk about the upcoming meeting in December. Okay? Cool. And then, you know, not only is the CIA meeting in December in Nashville, Tennessee, how many people are going to come for the party? Wednesday, I think it's Wednesday, December 13th. We're going to meet up for a group picture, cocktails, and a very high-end steak dinner. Who's going to come for the party? Nashville, Tennessee, December 13th. Well, Alexander, I mean, you make a good point. Setting up rooms and little stuff like that. Yeah. But, you know, again, I'd have to raise prices on the memberships. It's only $88 a year. you know what I'm talking about? Like, it's so stupidly cheap that the company can't afford to do anything. What do most gurus charge for 100 hours of education? $1,000? 2,000? 5,000? I charge $88. It's so stupid. You're in St. Louis? Yeah, that's cool. Yeah. Well, Cherokee, in this case, the CIA group, what we're going to do is on the first day, I'm going to show you the printouts of my retirement account in my corporate name at a very large Wall Street institution, right? And I'll show you what's in it. I popped in 50 grand not long ago into it, and I'll pop some more into it. And so the first thing is transparency. Here's my account. Then I will need to go through and explain what these investments are. So we have to go through basically each prospectus, and let me explain each strategy. I can also go over some strategies I'm thinking about investing in and explain them, right? And then we have to go through our economic conditions and this, that, and the other thing and understand where we are in the business cycle. So anyways, as far as transparency, I'm like, yeah, here's my corporate account. Here it is. Here's the statements. Here's what I'm in. Here's how much money is in each. Here's how much money I have in cash. And we're going to turn this into $1 million. Every 3 months we'll meet. I'll show you where we are. And we'll discuss market conditions, we'll discuss investment strategies, and we'll rebalance what we need to rebalance. We'll rotate what we need to rotate. We'll dump what we need to dump. We'll pump what we need to pump. But like, that's full transparency. Pretty cool, huh? So again, people that are going to join the CIA, you're going to get like board level experience of managing money for an endowment. This is an endowment, my endowment. Money that will probably be left to my children after I die. This is like 300-year money. It's going to start at 50 grand. You're going to help me turn it into $1 million. And we'll keep going. So you can stay as long as you want. But the longer you stay, the more the money, the bigger the money gets. And this becomes like real job experience. When someone says, well, have you sat on a board, an investment advisory board? You're like, yes. Yeah. Managing millions. Nice. By the way, you're going to learn a lot about hedge fund strategies too. You might get in there, you might learn things that you don't even know that you're going to learn. Or you're going to learn like personal finance. You're like, oh, and there's so many like complexities to it, but I think you're going to find something fascinating, like real world takeaways. Thanks, HP. Wow, I got a busy day. Oh, I got to create things. I got to send emails. And by the time I get it all done, it'll be ready for us to meet. And then we need to meet, and then I got to set up the next room, so then we got to meet, and then there's another one. Like, oh my God, this is one of those crazy days. But let me end today's session with this. I've been looking forward to this day since January. This is not an ordinary day. This is not just yet another Fed meeting. It's not. This is different. And I've been waiting for this one. This is it. This is a big day. Okay? My tie matches my handkerchief. It's that big of a day. Okay? So I'm looking forward to it. This is an exciting time to be a trader. It's a great time of year. It all comes down to this. We probably get some great trends that come out of this situation. I'm looking forward to it. So am I standing on tippy toes? Yeah, I'm standing on tippy toes. This is a big deal. Huh? Big deal. So I'm glad that we have a community that can deal with or be ready, willing, and able for these situations. There's going to be a lot of volatility, a lot of misunderstanding. And so anyways, thank you for being part of the Forex.Today community. I appreciate you.